All right, guys. So today we're having our lesson on psychological levels. Now, many times, if you've been watching my videos, either on TikTok or on YouTube, you should have been able to have heard me speak about psychological levels so many times. And now, on today's course, we want to have an understanding on psychological levels, what they are, and how they actually help us in getting trades in the Forex market. So my name is Dennis Cashpips again, and I'm here on my full free course that I'm uploading on YouTube. So if you have not yet been able to watch the first videos, I think you should first go and start from episode 1. And this is going to be maybe the next episode that we have, the latest. So what is about psychological levels? Today we want to learn about what are psychological levels over here. And then we want to also be able to understand why are psychological levels very important. And then we're also going to have to understand how to actually plot these psychological levels and on our charts. But we use majorly 3 major principles of psychological levels. So to start with, psychological levels are simply round numbers. Okay, they are simply round numbers on the charts that always the market has a reversal on it. Now, why are these psychological levels very important? Let's get a scenario right now. So let's say you want to go and buy a sacket of salt. Let me use salt because it's very important. For anybody, you need salt everywhere. So let's say you want to buy a sacket of salt, and you find that there are 2 shops that are selling that salt. Now, one of the shops is selling that for reference, because for contest, let's use 10 shillings. Uh, Whatever currency you're in, whether you're in dollars, less, if you're in US dollar, United States of America, you're going to use 10 US dollars. If you are in whatever country you're in, if you're in Uganda, you use 10 shillings. If you're in Kenya, use 10 shillings in Kenya. If you're in Nigeria, use 10 naira. So you have uh, a sacket of salt that is going for 10 shillings. Okay. 10 in your currency. Okay. Now, another shop is selling this same sacket of salt at 9.25 shillings. Okay. For contest. So if you are in dollars, you're working with this in dollars. Now, for you to be able to benefit from this person who is selling at 9.25, you will need at least 100 of them. Okay. So here you're going to need 100 sackets of salt. That's when you're going to get a discount to buy this sacket of salt at 9.2. So we are saying you may need 100 so that you pay $925 dollars or whatever currency you're in, or shillings, whatever. Now, for you, you need only 1 sacket of salt. Now, because you need only 1 sacket of salt, you do not have 925. Yes, it's going to be a good offer for a long time if you're going to buy for 2 years or 1 year. But 1 sacket of salt is enough for you. So you need 1. So if this guy says that you cannot get this discount unless you are buying 100, that means at that moment, because you need salt at this time, at that very moment is when you need salt. So you will definitely have to leave this guy out and go to this guy who is saying, no, just pay 10 and I'm going to give you a sacket of salt. Now, you notice because you bought at 10, you have actually spent more on that sacket of salt. But in real sense, it was the most convenient way to purchase salt at the cheapest. This looks cheap, right? But this is cheap at the moment because it does not have any problem with you having to get more money to buy more packets of salt, which you may not actually be able to use in a long run. Now, this is the same thing that happens. when the market comes to areas that are having round numbers, they always get people who have more offers to purchase at those round numbers compared to when the market is in areas that are not having round numbers. And that's why psychological levels are going to be very important when you're going to use them in your trading. So now, when we are plotting psychological levels, we are saying we have majorly three principles that we use to be able to plot these psychological levels. Now, the principles of psychological levels, we're going to go to the charts and then we're going to see what I'm going to do because we're going to do this practically. Now, principles of psychological levels. Principle number one is there must have four counting numbers in them. A psychological level must have four counting numbers in them. We are going to explain that, what it means. And then the principle number two is it must have either a 0 or a 5 in the fourth position for the pairs. So for example, we have, let me explain this together. So we have we're going to have a number, let's say randomly, because this is on GBP USD. So let's take randomly 1.375. Okay. Now, you cannot have, let me increase this to 40 so that we can see it clearly. Okay. So we cannot So 1.345 is a psychological level. But according to this principle that it has to have four counting numbers, we have one counting number, two counting numbers, three counting numbers, and four counting numbers. But in the fourth position, we're either having a 0 or a 5. So that means that the next, we can also have another one as 1.34 and 0. That is also a counting number, which is going to be exactly above the 1.345. Or we can also have the one below this should be a 1.34 and a 0, also below this one. Okay, so that satisfies our rules. The first rule is they are supposed to be four counting numbers, and then the other one must have a 0 or a 5. So that means that if I had a number like 1.356, this is not a psychological number. Why? Because it is not having a 5 or a 0 at the end. Also, if I had a point like 1.35 40, meaning that this number, at least it has a 0 at the end, or it could even have a 5 here. But the principle of the four counting numbers does not count. These are not four counting numbers. 1, 2, 3, 4, 5. These are five counting numbers. Now, also, when we have a number like that, it has a 5 at the end, but they are not five counting numbers. They are not four counting numbers. So because it is not having four counting numbers, in as much as it has a 5, we are not considering it to be a psychological number. Okay? It is not having a psychological number. So if we have a 0 here, also we are not going to call it a psychological number. Maybe later on, it is going to be one of very major levels, but it's not going to be a psychological number. So because it's not a psychological number, we ignore this and we are going to concentrate on our these numbers. Number two, the third principle that we have is the difference between one psychological level to the other must be 50 pips. So that means that if I have this level here and I have this level here, and I have put, let me put them beside. So let's say I have this level here and I have this level, and I am representing them with a line. For instance, this is the line, and this is also a line to represent this other level. So these are two levels. We are saying the difference between this level and this level must be 50 pips. So that means if you calculate the distance from here with a ruler to this level, it must give you 50 pips. Okay, if I get a ruler over here and I measure from this point to this point, if it's not 50 pips, that is not a psychological level. So that means we have three major principles, like we have said. The first one is it has to have four counting numbers. Now, counting numbers are numbers that begin from 0 onwards, okay? From 0 to 10. Let's take it from 0 to 10. So if we have a counting number from 0 to 10, that means it has to have four of them, okay? A four-digit counting number. Must have either a 0 or a 5 on the fourth position for the pairs. Now, why have I put this as for pairs? And also here only Forex. We have an exception on gold, which we are going to see on gold, and we are also going to see on other instruments that we're going to be having. So let's go to the charts and then see how this is actually possible. So look at this. We have a point here, for instance. Let's have a level here. I'm going to plot a level here. And let me reduce this to 2, for instance. So if we have this as the level, now we want to make sure that this level has four counting, the number that, it's a 4 number that has 4 counting numbers on it. So we go to edit this, and we say we have the first one, the second one, and the third one is going to be a 3. And now we want to look for the fourth one. But the fourth one, we are saying it has to be a 0 or a 5. So let's put a 0. Okay? That gives us a psychological level. Let's put a next one. Our next psychological level is going to be the same one, but we want to edit this now. We want to have a 1, 3, a 3, but on the fourth position, we want to have a 5. So that's going to be a psychological level. That already fulfills the rule. Now, when we get a calculator, a ruler, and measure from that up to this lower, it must give us 50 pips. Okay? You can see the difference is 50 pips over here. This is 50 pips. So that means that our psychological level is valid. Now let's plot another one that we are going to use to see what magic psychological levels have in the market. So we have 1, 3, 3. So we had 1, 3, 3. So we're going to go to 1, 3, 4 so that we can have a 0 at the end of the cycle. So we have that as a psychological level. And then we also have another one, and we're going to plot it as 1.34. Now we are going to a 5, not a 0. We put a 5 there, okay? Then we go to the next one. We are going to also plot this. And now we have moved from a 4 to now we have a 5 for 1.35 and a 0, okay? That gives us a psychological level. And then we are going to also have the next one as a 5, but having at the end, not a 0, but a 5. Also, we have 1, 3, 5, 5. And that's going to be another psychological level. Now, from this alone, let's see what the market does. Okay? Let's see what happens. You can see when the market came to this psychological level, the market was bullish. Okay? So let's see. You can see the market was moving up. When it came to the psychological level, what happens? It rejects and it drops down. Okay? When it comes to this level, it pushes up, and then when it crosses the psychological level, when it comes to this level, what happens? It rejects the psychological and moves up. When it drops back down, what is happening? It's also coming to a psychological level and then pushing up. This happens over and over again. Now, we cannot be able to trade psychological levels alone because there are so many other things that we have to incorporate in our trading system to be able to use it. So, for example, you see this, when the market came and broke above this level, what happened? It came back to the psychological level, it rejected and bought, okay? Again, you can see what happens. The market came, broke the psychological level, and then retested it, and then comes and gives us another entry from here to buy. Again, the market comes and moves up, broke this psychological level. When it came back to reach this area, what happens? It rejected the level and went up. When the market came and broke below the psychological level, you see, when it reaches this psychological level, what happens? The market rejects above and goes to the upside. Okay? So when the market reached this level, dropped back, definitely this could be another psychological level if we had added it. So we have a 1.36 now. Okay, 60. Okay, so you see, it rejects that psychological level. But when it comes and breaks below this psychological level, what happens? Breaks below, and then comes up to retest, and then it drops, rejecting the psychological level. You can see this happening over and over again in the charts. This is just GBP USD alone. Okay, this is only GBP USD. And the same thing happens. When the market comes to this level, what happens? The market rejects that zone on the psychological level, and then it pushes up. Comes here, breaks above, when it comes, reaches this level, rejects that psychological level, and drops back down. When the market broke below this psychological level and then traded above, it comes back to test that psychological level and then drops again back down. You see, the market comes and then also breaks the psychological. When it comes to this level, what happens? It drops down. When it breaks above this level, you see it has come back now. If you were to trade psychological levels alone on GBP USD right now, you would have taken a trade from here. Why? Because the market came and broke above the psychological level, has come back to retest it. You can see candlestick reaction, and we are targeting the next psychological level. Now, you've seen me or you've heard me say next psychological levels in my videos. This is what we are talking about, okay? This is what we are talking about. So you take a trade from here because you know you are trading a psychological level. Stop loss right below the next swing point, and then we are targeting the next psychological level. That's how we trade and how we plot psychological levels. Let's go to another instrument, maybe. So this is USD JPY also. So how do we plot USD JPY? So we are saying it has to have a number that has 4 counting numbers on it. So we're taking 1 to 10. So you see, from here, if we plot a level here, let's plot it down here so that we plot them going upward. So we have 1.157.5 is a psychological level. If we also add another one, so we have 157, and at the end of the day, we have a 0 on it, is also another psychological level. Then we go to, okay, moving forward, we go to another level, which is going to be 1.5. Now, instead of a 7, we are going to an 8, but 0.0. And it also gives us a psychological level. And then another one, we also have 1.8, and then in the 4th position, we put a 5 and not a 0. So we're doing this over and over and over again. So you can see the same thing happens. I think let's add more positions, more. So instead of an 8, we're having a 9.0 and gives us a psychological level over there. Then we also have another level here with a 9, but then ending with a 5. And we have that level. So see what happens. The same thing is happening. Look at history. Let's go back in history. Let's go back in history, only using this level. Let's add another one. Okay, so 1, 6. Okay, we have that level here. And now let's see what happens. So you can see from here. Okay, let's start from here. So the market is reaching this psychological level and then pushing up. When it reaches here, rejects this psychological and pushes down. When it breaks above that psychological level, we see the market is coming back to retest this same psychological level, and then it pushes back up. If the market reaches here, what happens? The market is rejecting this psychological level, and then we are dropping. You can see when here, when it came back, it rejected that psychological level and dropped 50 pips. And then when it reached here, also it rejected this psychological level and then it moved up 50 pips. When it came and broke above, it retested, it moved again lower and also moved. Okay, so you can see it came here also, broke above, came back to retest it and moved up 50 pips. Okay, you can see this, over and over again. Market is rejecting this zone, rejecting this psychological level, and then it broke above. Once it breaks above, we are taking a trade from here, and then we are taking 50 pips. You can see it comes back again down here, still rejects the psychological level and pushes up. Still rejects the psychological level and pushes up. So you can see it broke above. Here should be a psychological level. Okay, so that should be a psychological level also 5. Okay, so you see it rejects the psychological, comes, breaks below, and then comes to test that psychological level and then pushes below. When it comes to this level, it also breaks below, and then it comes back. Once it breaks above, we're waiting for a retest, and then we trade above. So you can see this happening over and over and over and over again. So you see the market breaks below again here, and it comes to retest it. If you're on lower time frames, you'll see that this is a break and retest. Breaks below, then comes to retest it, and then we are moving down. Comes and rejects this psychological level from here, you can see, and then it pushes up back. Okay, this is happening over and over again. Now we are getting all these concepts that are actually working, and then we are merging them to get our system that is going to work for us. So you see this rejects, then comes back here, also rejects that level. You can see you are rejecting off of the psychological level, just off the psychological level, the market is moving up, comes back here, breaks above. Then, psychological levels are really, really turning points. They are always working as support and resistance in the market. Okay, you can see the market pushes up, comes here, rejects, goes to the 50 pips. Comes here, rejects this level, pushes to 50 pips. You can see now breaks below, and then trades below. Like psychological levels, look at this. Market comes and rejects this level and then pushes up. Now, if you are trading, people who are trading with a trend, okay, what would happen here? Because if your market is here, bearish, okay, so you can see psychological levels are rejecting the market, going back up. Once the market rejects the psychological level, it drops, goes to the upside. Rejects the psychological level, pushes up. Rejects the psychological level here, pushes down. At this level, breaks, comes back. Psychological levels are playing a very, very vital role in the movements of the market. So now mastering this also is going to help you to be able to understand how to pick very good trades in the market and actually be able to profit from them. Now, we had an exception on gold and silver. We said we have an exception on gold and silver commodities. Now, this is the exception that we have. Now, on gold and silver, in gold, we have, instead of having the 4 counting numbers, with commodities like gold and silver, instead we have 3 counting numbers. So here you can see We have a number here. We have 48, 82 point. Now, in the third position is where we are going to put a 0 or a 5. I'm using silver now, but you can also go and plot. I'm going to leave the assignment for you to go and plot psychological levels on gold. So we're having silver. So here we have 820. So here we're going to have 82. No, 830. 8.30. And then we have also another level in between that. So that we have 82.5. So we can plot this again over and over again. And we drop down to these levels, okay? So let's plot another psychological level here. Uh, 75. So we are saying we have three numbers, but the third number must have a 5 or a 0. Another one, this one has a 5. We give it to be having a 5, okay? And then we have another one here, which has 8. Instead of 8, we're having a 9.0. And now look at what happens. Okay, market rejects this level, pushes up. Market reaches this level, pushes up. And then there should be a psychological level also at this level. Okay. Okay, we can see that's an 8. Okay. So you can see on silver also, the market comes, rejects this level, pushes back up. You can see market rejects this level, pushes low, rejects this zone, pushes low, rejected this level, pushes. Now, when you're trading with a trend, what happens is if you're trading only psychological levels, for instance, we just trade. Once the market breaks below a psychological level, we wait for it to retest and then we sell. The market comes, broke below this psychological level, we wait for it to retest, we sell. Market broke below this psychological level, we wait for it to retest, we sell. Okay. You see, we are selling until the market is exhausted. So once the market comes and turns around, so broke above the psychological level, wait for it to retest, and we buy. Okay. So we see the market has also broken below the psychological level, so we waited for a test and then we sold. So we're waiting for it again to come. If it retests this level and it gives us a candlestick reaction, we again selling. Unless it gives and breaks above, then we want to look for buys and we wait for it to retest and we buy. So when you're trading with psychological levels, you wait for the market to break and then it retests and then we take the trades. We wait for the market to break, we wait for it to retest, and then we take that. It's just that's how simple we do with how way we trade with psychological levels. Now, I want you to do this one for me. I want you to go to your charts and I want you to plot psychological levels on Euro USD for Forex pairs. And you're also going to plot psychological levels on gold. Okay, so let's leave an assignment here. Assignment. Okay, so our assignment is saying to the charts, plot psychological levels on Euro USD and XAU USD. Okay, so this is the assignment we have. You're going to go to your charts and you're going to draw psychological or plot psychological levels on Euro USD and on gold. And then after you've put that, you're going to take a screenshot or a screen recording of when you're plotting the psychological levels, and then you're going to send it to me, because this is now, because the course we have been having, this is one of the most essential part of the course. So you must be serious with this. Plot them, do a screen recording, or send for me a screenshot of what you have done. Okay, the plotting you have done, take a screenshot. I am going to look at it and I'm going to see and understand that you have actually plotted them well on gold and Euro USD. That's the assignment. Now you can go and do the excess assignment. You can go and do plot psychological levels on any other instruments, on other pairs, and then we see how they will all go back. So that was a psychological level class. Let's see you in the next one.